Hello everyone, I am Jayasha and this is the second video of types of orders. So the previous video which I made on types of orders, it already went too long up till I guess 42 minutes, around 42 minutes that video. And I guess it was it was the longest video which I uploaded till now. But anyways, so in the last video on types of orders, we discussed four important concepts: limit order, market order, stop loss limit and stop loss market. Now in today's video, we are going to cover the remaining concepts in types of orders. But it was important to understand these four concepts which I had discussed in my previous video. So they cover majority of the concepts in types of orders. But if you have understood those concepts, then the today's concepts which I am going to discuss in this video, they will be quite easy for you to understand. But you need to understand the concepts of the previous video as well. So you can go to my channel and you can find that video, and I'll attach the link of that video in the description of this video as well. So let's start with today's video. I'll take the example of Axis Bank only because in the previous video also we took the example of Axis Bank. So let's continue with this example. Okay, so let's say I go to buy. Okay, now intraday and delivery you have already understood in the previous video. Limit, market, stop loss limit and stop loss market, these four orders also you have already understood in the previous video. Now let's go to this advanced settings. Okay, now first I want to explain to you this validity, which is either day or it is IOC. So IOC is immediate or cancel. Okay, now for day you can see it's written here, your order is valid till the end of the day. If not executed, it gets cancelled. Okay, so one thing is that you place an order and one thing is that the order gets executed. Okay, so let's say I place an order here that I want to buy at 660 rupees. I place a limit order. So once I place this order, it will not be executed until the price reaches 660 rupees, right? So now let's say I placed the order this for buying 660 rupees, and let's say I placed the order for buying 10 shares. Okay, now let's say till 3:30 p.m. the price did not go to 660 rupees. It just kept on fluctuating between 665, 666, but it did not go to 660. Okay, so in that case my order won't be executed, right? So at 3:30 p.m. if the order till 3:30 p.m. the order is not executed, then at 3:30 p.m. the order will be cancelled. This is if the validity is day. Okay, another option is immediate or cancel. Okay, so in immediate or cancel, the moment I place the order, if the next moment the order is not executed, just cancel the order, right? So it is very simple. There are only two cases. Either the next moment after I place the order, the next moment either the order will be executed, or if the order is not executed, then the order will be cancelled. Okay, now here if the order is partially, so what is meaning of partial? So let's say I placed the order for 10 shares here, right? But let's say the system only found the seller, so I am willing to buy 10 shares at 660 rupees, but the seller is only ready to sell 5 shares, let's say, right? So in that case my order will be partially filled, right? So out of 10, only for 5 quantity the order is matched, right? So even in that case, so immediate or cancel means that either I have to so when I place the order, immediate or cancel means the next moment either buy 10 out of 10 shares which I want, or just cancel the order. I'm not even ready to wait for 1 minute or anything. The next moment I want the shares, if that does not happen, just cancel the orders. And even if out of 10 I get 5 or 6 shares, that's not what I want. The next moment I have placed the order for 10 shares, I want all the 10 shares. Then, and that too even on the next moment. If that doesn't happen, cancel the order. That is IOC. Okay, so either the validity can be day or it can be IOC. So if the validity is day, the system will wait till 3:30 p.m. If the order is not executed, the order will be cancelled. If it is IOC, the system will wait for just one moment or one instant or 1 microsecond, whatever you want to call it. If it is not executed immediately, the order will be cancelled, right? So this was immediate or cancel or day. This is the validity. Now let's go to order complexity. So the first option which you can see here is cover order. Okay, so cover order is basically that it is telling me to specify the stop loss right now only. So the system is telling me that okay, you have placed a buy order and you are telling that you want to buy at 660 rupees. So you specify a stop loss now only. So let's say I specify my stop loss as 650 rupees. That okay, if I buy 10 shares at 660 rupees, and after that if the price goes to 650 rupees, so sell it off. That is my stop loss, right? So that is cover order. This can be also for sell. Okay, so if let's say I go for sell and I'm short selling this, let's say, okay, and let's say the same price 660. Okay, for short selling, let's take 668. Okay, so I'm short selling at 668, and now if I do this stop loss, so cover order, so here it will be a stop loss buy order, right? If it was, so when I was buying 10 shares at 660 rupees, the stop loss was a sell order. Now when I'm short selling it, the stop loss is a buy order. So let's say my stop loss is 675. That after me selling at 668, if the price goes to 675, buy it immediately and book my loss, right? So cover order basically means that whenever you are buying or selling, even before buying or selling, specify the stop loss, that if you are able, if the order gets executed, then what is your stop loss? So I have placed the limit order for 668 rupees to sell those shares, right? So if I am able to sell those shares, if the order is executed, what will be my stop loss? That is cover order. That specify the buying or selling price and specify the stop loss also right now only, right? Automatically. Not automatically. It means that so if I place a 675 rupees as stop loss buy right now, I won't have to place a stop loss order separately, right? If I just do it as simple order, then I have to place a stop loss order separately. But I can do it in the same order, and it is also advisable to do so, because whenever you are buying or selling, you should already know your stop loss. It is like kind of a discipline, like I had explained to you in the previous video as well, right? Now let's go to the next type of order, which is one cancels other, which is OCO. So in this, it tells you to specify your stop loss also and your target also, that you are willing to sell at 668 rupees. So specify your stop loss also and specify your target also. So when you're short selling, you want that the price should fall. So let's say that you sold at 668 and your target is that when it will go to 650 rupees, at that time I will sell, and my stop loss is 675 rupees, right? So cover order means that just specify your price at which you want to buy or sell, and also specify the stop loss along with that. And one cancels other means specify your price, specify your stop loss, and also specify your target. That if the price goes in your favor, then what is your target at which you want to buy or sell? Or what if the price doesn't go in your favor, then what is the maximum loss you are willing to buy? So specify your stop loss also. So again, now here this was a sell order, a short sell order. So the stop loss and target both are buying. So if I place a buy order, then the stop loss and the target both will be sell order. See, stop loss sell, target sell. So if I place, let's say 660, so I want to buy at 660. My stop loss is 650. So 10 rupees loss per share, and my target is, let's say, 700 rupees. So 40 rupee per share is my target, right? So I am ready to buy at 660 rupees. After that, if the price goes to 700, immediately sell it off, because that's the target sell order. And if the price goes to 650 rupees, then automatically sell it, because that's my stop loss order, right? So if the stop loss order is executed, the target order will be cancelled. If the target order is executed, the stop loss order will be cancelled, right? So if you are buying, the stop loss and target will be a sell, and if you are selling, the stop loss and target will be a buy. So when you are buying, stop loss and target will be sell, and when you are selling, stop loss and target will be buy, right? So we talked about simple order, that is no complexities, just place the buy or sell price, whichever one you want to buy the stock, or whether you want to sell the stock. So see, simple order means just put the buying and selling price, buying or selling price, just put the quantity, right? And price also, if you have to put only if it's a limit order. If it's a market order, then just put that whether you want to buy or whether you want to sell. That's the simple order. Cover order means along with that also specify the stop loss. One cancels other means along with stop loss specify also the target price. So simple order means just tell me that whether you want to buy or sell, whether you want to buy or sell at a limit order or a market order. If it's a limit order, then what price, and also tell me the quantity. Cover order means specify all of this along with the stop loss. And OCO, one cancels other, means specify all of this with stop loss and also the target, right? So if you are placing a buy order, the stop loss and target will be sell, and if you are placing a sell order, then the stop loss and target will be buy, right? So OCO means that if the stop loss is hit, the target order will be cancelled, and if the target is hit, then the stop loss order will be cancelled. Let's understand the last type of order, which is after market order. So after market order is very simple. You can place the order after the market hours. So the market is open from Monday to Friday from 9:15 to 3:30, right? 9:15 a.m. to 3:30 p.m. After this also you can place the order, just that the order will get executed the next day during the market hours. So let's say today is Monday, and it's right. So when I'm recording this video, the market is open, but let's say that it's 5 p.m. and the market has closed. So I can place an order to buy or sell, but the order will be executed. So today is Monday, and I placed the order after market order at 5 p.m. The order will get executed tomorrow at 9:15. That is Tuesday at 9:15 a.m. Right? I can place the order now, but the order will get executed tomorrow during the live market hours. That is 9:15. Right? So this was concept of aftermarket orders. Now, before coming to this concept of disclosed quantity, let me show you this market depth table. So here you can see the quantity and the prices. So they are like 1000, 100, 4000, 3000, right? Now imagine if here there was a quantity like 10 lakh. So someone is either willing to buy 10 lakh shares or someone is willing to sell 10 lakh shares. So let's say someone is willing to sell 10 lakh shares. So the buyer can take an advantage, right? So he can see that, okay, someone is desperately willing to sell 10,000 shares. He's wanting to sell. And so 10 lakh shares is a huge quantity, right? So he can take an advantage and he can lower the price, right? He can take advantage of the situation that the seller is having such a huge quantity of shares. So, and similarly, if there is someone who is wanting to buy 10 lakh shares, so in that case, the seller can also take the advantage. So what disclosed quantity means that, so if I go to, let's say, buy, and let's say that I want to buy 10 lakh shares. Okay. So what I do in, okay, let's go to, let's say, sell. Okay. And I want to sell 10 lakh shares. Okay. So 10 lakh shares. Okay. No, this is 1 crore. Okay. 10 lakh shares. So now let's say I type the disclosed quantity as 1000. So in the market depth table, only 1000 will be shown. Okay. So what will happen is 1000 will only, out of 10 lakh shares I want to buy, I want to only disclose 1000 at a time. Once those 1000 are completed, then disclose the next 1000. Similarly, up till 10 lakhs, right? You're wondering that now if you just disclose 1000 at a time, then when will the order of 10 lakh shares be completed? So the 10 lakh shares order can be even completed within 1 minute also. Okay, so there are huge volumes in the stock market. It also depends on the stock, obviously, but there are many people who are participating in the stock market, and there are many institutional investors also. There is FII, there is DII. So the point is that the 10 lakh shares can also get sold within 1 minute also. Okay, so if I show this market depth table to you, so you see that the price is changing every second. Okay, and the quantity also is changing. Okay, so see, if you just take a screenshot, and if you see that the price let's say is 665.20, and the quantity, let's say, was 400 rupees beside that. Okay, and after that the quantity became, let's say, 300, and the price, the bid price remained the same. It means that, so first 400 people were willing to buy at that price. Now only 300 people are willing to buy at that price. So maybe what would have happened is, for the 100 quantity, the order got executed, right? So the market depth table shows that the people who have placed the limit order. Okay, so it only shows the people who are willing to buy or sell. They have not yet so they have just placed the order. The order has not yet been executed, right? They have not yet bought or sold. They have just placed their order till now, right? So that is what is shown in the market depth table. So disclosed quantity is usually used by the people who are in, they are trading in like 10 lakh shares, 1 crore shares, like large quantity, and they are investing huge sums of money. So disclosed quantity is used by them. Okay, normal people like you and me, even if we do not use this disclosed quantity, it's okay, right? Like you can see here, it's written optional, right? So now we understood intraday and delivery, right? So intraday means you want to buy and sell on the same day, and delivery means if you buy today, then you can sell it off after 1 year, 2 years, 5 years, whatever, it's your choice. Then these 4 types of orders also we understood, right? Limit order means I want to buy above or below a specific price, right? And market order means that whatever is the price, just buy or sell. Stop loss also you have understood, and we have got a detailed discussion on stop loss in the previous video, right? Then these 4 types of orders, simple is just specify the price, whether you want to buy or sell, and the quantity. And price also you have to specify only if it's a limit order. If it's a market order, don't specify the price also, right? Cover order means whatever you specified in the simple order, along with that also tell me what is your stop loss. OCO means along with that also tell me your stop loss and your target. And after market order means that you can place the order after the market hours, and the order will get executed the next day at 9:15 a.m. right? And validity also I explained to you that whether the validity is day or whether it is immediate or cancel. So if it is IOC, if it is immediate or cancel, then the moment you place the order, the next moment either the order gets executed completely, 10 out of 10 quantity or whatever the quantity you have entered, or the order gets cancelled. And day means the order will be executed, or if it does not get executed till 3:30, then the order will be cancelled, right? So validity is 1 day, right? So these were all the types of orders which I wanted to explain to you. So what I will suggest you is that reading books about stock market, watching videos about stock market and everything, taking courses, Udemy courses, everything is fine, but just try to, just do it practically. Okay, so whether you are buying 1 share or 2 shares or 10 shares, it doesn't matter. Whatever is the amount you can start with, just try to start with it. Because see, watching videos and everything is fine, but till you do something practically, you won't get the real time experience of it, right? So I'll suggest to you that if you have till now you have not started, actually investing in the stock market, and you have just, you have been just reading about it and learning about it, just try to start with at least 1 share. Okay, it's okay if you make losses in the beginning. So what you can do is, in the beginning you can invest a small amount so that the losses will also be small, and once you learn, you can start investing the higher amounts slowly and steadily, right? So this is the Upstocks app which I have been using since a long time, and I will give the link for this in the description. You can open your account with Upstocks if you haven't already, and I'll also give the link for the previous video. You can also check it out on my channel. You can go to my channel and check it out. Types of orders, part 1, and this video which I'm currently uploading is part 2, right? So the previous video and this video, both of them complete our discussion on types of orders. So that was it that I wanted to discuss in this topic, types of orders. The previous video had become quite too long, so I had to include the remaining topics in this video. So that was it. I hope it was useful, and so that was it about this video. I'll see you in the next video. Bye bye.